Hi, everybody. It's Leslie with the New Mexico Small Business Development Center, and I'm here today with attorney Mr. Ian Alden. And Ian is going to be telling us about insurance, the best line of defense for your business, because it's very important, and we want everyone to make sure that if they do have any questions throughout his presentation, that you just type them into the Q&A and he'll pick them up throughout the entire presentation, which is good because I always think of something to say, and so gives me a chance to also talk about some things that I think are important. I want to remind everyone that the New Mexico Small Business Development Center encourages all New Mexico small businesses to take cybersecurity and the risk to your data very seriously and to protect yourself against ransomware. We have a lot of webinars that are on demand, pre-recorded. We also post them on our YouTube channel, so watch for that. I'll turn it over to Ian Alden for insurance, the best line of defense for your business.
Thanks so much, Leslie. My name is Ian Alden. I'm a business attorney here in Albuquerque, New Mexico. It's good to be with you all today for another workshop. I just want to cover a few quick points before we get started. There are a number of resources available to you all, to business owners throughout New Mexico that have to do with COVID-19, safe business operations, reopening in the age of COVID. There's a lot of considerations still to be made, even with the vaccination rates increasing and the case numbers decreasing. So be sure to avail yourselves of the great resources at your disposal. There's a number just on this slide, which you should be able to get after the presentation. So just be sure you're doing what you can to make sure that your workplace is COVID safe, so that you can get back to doing what you do best. A few housekeeping notes. Your microphone should already be muted, but if it ever comes unmuted, please make sure that it stays muted. Make sure, if it's not already, that your Zoom ratio is set to fit window. That's so you can see everything on these slides. As Leslie mentioned, we're going to be using the Q&A function to take questions, and I'm going to be taking them throughout the presentation. So if you have a question, don't feel the need to wait until the end. Just jump right in, use the Q&A function of Zoom and ask your question. I'll take them as they come. If you do decide to hold your question until the very end, just make sure you write down the slide number. It's in the bottom right-hand corner. That way I know what we need to look back at. As Leslie mentioned, there's a number of great offerings from the SBDC coming up, having to do with cybersecurity and other important topics for business owners. On June 29th, we've got cybersecurity, an introduction to protecting your business. Very important. I'm sure you all heard about the Colonial Pipeline ransomware incident that cost millions of dollars. These things are happening to businesses large and small. And as I'll talk about a little bit later in the presentation, the economic damages that are caused even with a hacking event for a small business can often dwarf the assets that the small business has. So the best thing you can do is be proactive in your cybersecurity approach. So check out that workshop. There's a number of others coming up having to do with good marketing practices. I'm leading one on the first, how to buy and sell your business, keys to doing that successfully. Lots of great resources in addition to the other resources SBDC offers, no cost business counseling and loan application assistance, among many others. So be sure to go to nmsbdc.org and check out all of those resources. Now, as a few words of disclosure, this is all just being presented for informational purposes without regard to anyone's specific situation. Every business owner situation is unique. Everyone's insurance needs are unique. So be sure to consult with qualified professionals, whether that's an insurance broker or someone who can actually help you tailor insurance policies to your needs. Everything that I'm talking about in here is very generalized, and I am not a licensed insurance broker. So keep that in mind. We're covering the generalities of insurance and how it works and how it applies and protects your business. So we're going to break this down into four pretty straightforward sections. I'm going to cover the basics of insurance, how it works and how it applies to your business, the different types of insurance that apply to your business. There's more than you probably think. So we're going to cover 8, maybe 9 different types of insurance pretty briefly, but just so you understand what the different policies are that you might need. There's a lot of mixing and matching for business owners, so we'll cover all of that. I'm going to talk about some examples and case studies and how things work depending on the types of insurance you have, to maybe give you a sense of how you might mix and match to protect your business. And then we're going to have just a, at the end of this, we'll have a Q&A session for anyone who didn't ask their questions during the presentation. But to start, before I really get into what insurance is, because I know you all have a basic sense of insurance. You've probably got car insurance if you drive because the state requires it. You've probably got health insurance. So you understand at a very basic level what insurance is. So I'm going to run you through two hypotheticals to explain why this really matters for your business. So let's look at hypothetical one. Jared, I just pick random names here. So just a hypothetical, Jared owns and runs a small convenience store as a sole proprietor, which means he doesn't have an LLC, he doesn't have a corporation. He's just running the business on his own, in his own name, DBA, Jared's Convenience Store. He's got employees. One of those employees is mopping the floor of the store. He doesn't put out any wet floor signs or caution signs. A customer slips and falls, causing 50 grand of medical bills plus additional damages, the usual stuff people demand, pain and suffering, etc. The customer sues the business. What happens in this hypothetical? So he's a sole proprietor. So there's no LLC, there's no buffer between him and the business. The business is legally just an extension of Jared. So the customer can sue Jared personally. In fact, if they sue the business, they are suing Jared personally. And with no insurance policy to absorb the damages, Jared is just on the hook. The customer wins the lawsuit. Jared is going to have to pay probably that 50 grand in medical bills. He's going to have to pay some pain and suffering and so on, which that customer is then going to have to figure out how to execute the judgment. Does Jared have 50 grand in his bank account? Probably not. So he's going to go after Jared's house, cars, bank accounts, etc. So that's a sole proprietorship, which, I rarely deal with those anymore because LLCs are so easy. Pretty much everyone has at least an LLC for their business, if not a corporation. But let's look at that. Hypothetical two, basically the same set of facts, except Jared has an LLC. Still doesn't have insurance, but he at least has an LLC. So the convenience store is owned by an LLC. Customer slips and falls, sues the business. What happens now that Jared has an LLC? And this is where the outcome might surprise you. Now, the customer can sue the LLC first. That's kind of what they have to do. If there's an LLC, it's presumed to be the entity that the customer has to sue. So they can't just go right after Jared. But let's say they sue the LLC and get a judgment against the LLC. And the LLC doesn't have a ton of money. I mean, it's a small business, it's struggling, it doesn't have a lot of money or other assets to pay, 50 grand, 100 grand, whatever the damages of the customer are. So the customer is going to look to the court and say, hey, I got this judgment against the LLC. They were clearly negligent and they don't have anything to pay me. Will you, the court, let me go after Jared personally? And the court in this instance, under a theory of piercing the corporate veil, will in many cases say yes. So despite there being an LLC, because the LLC itself didn't have anything that could functionally be used to satisfy the judgment, the court's going to let the customer go after Jared, the business owner, anyway. And so Jared could still be personally liable if the customer prevails. And so I say all this to drive home, and I encounter this a lot in my consultations with business owners. An LLC or a corporation is important. It is an important buffer to protect the owners against liability. But I tell my clients that the first defense, the first line of defense that is going to protect you more than anything else is actually your insurance policy. For reasons we're about to cover, having the LLC is important, but having the insurance is in many cases just as important, if not more so. And so let's have a look at what insurance really is. In a fit of laziness, just to drive some points home, I pulled this definition off of Google. I Googled insurance, and this is what comes up. The first definition right here, a practice or arrangement by which a company or government agency provides a guarantee of compensation for specified loss, damage, illness, or death in return for payment of a premium. That definition just hits the nail right on the head. You, the insured party, get a contract for an insurance policy from an insurance carrier or provider. You pay them whatever the premium amounts are, whether that's monthly, quarterly, annually, or in an upfront lump sum payment. It doesn't matter. You pay the premium. And then once you've paid the premium, assuming you're holding up your obligations, the insurance provider will pay out in certain cases of loss, damage, illness, or death, assuming it's covered by the terms of the policy. So we go to that. At its core, insurance is a contract. It's a contractual assurance that if you do what you're supposed to do, you pay your premiums, the insurance company is going to defend you from lawsuits or claims that fall within the scope of the insurance policy. And at the end of the day, that insurance policy is going to pay those claims if they're successful. That's really the long and short of it. Obviously, insurance can be a very complicated thing with lots of different terms. We're going to cover a lot of them, but at its core, that's what insurance is. All of the 8 or 9 different types of insurance that we're going to talk about, they're all that. They're contracts. You pay money, the insurance company covers the claims. So, important to understand, insurance policies often have policy limits. They're broken down into 2 types, per person and per occurrence. A third policy limit that you might often see is what's called lifetime coverage limit. We'll talk about that a little bit when we get to commercial general liability insurance, but some insurance policies do have lifetime coverage limits. Basically, the policy will only ever pay out so much, and then it was exhausted and it'll pay no more. But looking at per person and per occurrence, it's important to understand these. Let's look at a hypothetical. Joe has an auto insurance policy, limits of 50 grand per person, $100,000 per occurrence or incident. That's actually a little higher, if I'm remembering right, than New Mexico requires. I think New Mexico only requires a 25-50 policy unless they increased it, but Joe has a 50 and 100. So Joe hits a car with 3 people and is at fault. Each person in the car he hit suffers $75,000 in medical bills and other damages. What happens here? The insurance policy is going to pay up to its limits. So up to $50,000 per person, despite each person having 75 grand in medical bills. And it'll only pay $100,000 for the entire occurrence or car accident. So even though you've got 3 people with over 200 grand in damages, the policy is going to cap out at 100 grand per occurrence, and the occurrence in this case is the car accident. So because there are 3 people injured in the same accident, the maximum they can recover from the insurance policy is 100 grand. And this is really important to understand because then we're going to talk about umbrella policies in a little bit and how they can cover the excess, the difference. They make up what the primary policy doesn't pay. But it's important to understand these sorts of policy limits. Some other important concepts, very important to understand, especially if you're in some sort of professional practice, doctor, lawyer, accountant, etc. Insurance policies can be what's called occurrence-based or claims-based. Occurrence-based insurance policies, they are liable to pay damages if the event giving rise to those damages occurred when the policy was in force. I'll give you an example of this here. If Jared's business, his convenience store, had an occurrence-based general commercial liability policy that pays, bodily injuries for third parties. That's an occurrence-based policy. General liability insurance is typically occurrence-based. And so if the customer slips and falls, and then Jared's business goes under a week later, he cancels the insurance a week later, and then a year later, well after the business went under and the insurance policy was canceled, that customer comes out and sues. because the injuries occurred when the policy was in force, the insurance would still trigger and would still have to pay the claim of that customer. That's what an occurrence-based policy is. It looks at when the injury occurred, if the policy was in effect when the injury occurred, the policy applies even if the policy is canceled before a claim is made. Claims-based policies are literally the opposite of that. A claims-based policy will only pay damages if the claim is made when the insurance policy is in effect, even if that insurance policy wasn't in effect when the incident giving rise to the damages took place. Common examples of this are malpractice insurance policies, medical, legal, other errors and omissions policies, which we'll talk about. Those are typically claims-based. And so if you're a lawyer, for example, and you have a malpractice claim brought against you for something that happened 5 or 10 years ago when you had a completely different insurance carrier, or maybe you didn't even have insurance, but you have claims-based insurance now, your claims-based policy is theoretically on the hook for that because it covers claims as they're made. So it's important to understand that because if you're in a position where maybe you have errors and omissions insurance, or maybe you have commercial liability and you think, for example, you know, I have this E&O policy, I'm going to retire, but I had this E&O policy throughout my entire practice, so I should be fine. Not the case. For E&O policies, you have to have something pretty much for your entire life, whether that's a continuing policy or tail coverage, just because, you know, the policy, if it's not in effect when a claim is made, it's not going to cover anything. And finally, and this is really key for business owners, and this is something that a lot of people might not understand or even know about, but it's one of the biggest perks of having insurance in the first place. It's not simply that the insurance will pay a claim if the claimant succeeds, but insurance policies often have what's called a duty to defend. It's an obligation of the insurance company to either provide you, the insured, with a lawyer or legal defense, or to pay for your legal defense if you have to go and hire a third-party attorney or law firm. The duty to defend makes sure that you have a lawyer or lawyers in place to defend you against claims. It's important for you and the insurance company. I mean, this is of mutual benefit for the insured and the insurer, because if, for example, you've got an insurance policy, let's say it's $1 million, but it doesn't have a duty to defend, and the insured party doesn't have the money to hire their own lawyers, the claimant is going to steamroll over the insured, get a judgment against them, and then go right after the insurance policy to satisfy the judgment. So if the insured had a good legal defense, maybe they wouldn't have had to pay out that claim. So the duty to defend, it's important to understand because it saves you, the business owner, money, because you don't have to go out and immediately pay for your own lawyers every time there's a claim. And it saves the insurance company money because a properly defended claim means that they have to pay less out of their own pockets through the insurance policy. So duty to defend is important to understand this as well. Even if the insurance company thinks, well, this claim doesn't really fall within the bounds of the insurance policy, often the insurance policy will have a duty to defend under a reservation of rights. And what that means is the insurance company can challenge the use of the insurance policy to satisfy a claim, but while they're challenging it, they still have to provide a defense for you, the insured business owner. This is really critical because, the difference between having insurance and not having insurance isn't just a pool of money to pay claims at the end of the day. It's also a pool of money to defend you from those claims in the here and now. It saves you, and I speak from experience as a lawyer, litigation can run $30,000, $40,000, $50,000 or more in some cases. So having a duty to defend out of the insurance policy will save you that money up front. So important stuff, important for business owners, and it's one of the big reasons why I say time and time again, an LLC is great, but your insurance policy is going to be your first and best line of defense. So now we're going to cover insurance types, and I'm going to cover 8 different types here, and I'll probably cover 1 or 2 more at the end if there's time, but these are kind of the big 8 that every business owner should look at and ask, do I have this? Do I need this? You know, if if you need it and you don't have it, you should probably get it. If you have it and you don't need it, maybe you should look at canceling it. But it's important to really work with a good qualified professional to analyze your needs and say, okay, this is what this policy can do for me. This is what this policy is doing for me. But let's look at them. The first and the most ubiquitous among business owners, the most common, is general liability insurance, often called commercial liability. I call it commercial liability all the time just to separate it out in my head from other kinds of liability policies. But general liability insurance, it covers damages suffered by third parties resulting or arising from bodily injury or property damage. And I say third parties to highlight a point in that it does not substitute for workers' compensation, which covers injuries to employees from on-the-job workplace injuries. So this policy, general liability insurance, GLI, it covers injuries, bodily injuries, property injuries, or property damage suffered by third parties relating from the conduct of your business. It often covers in the event of employee negligence. For example, the incident with Jared, the employee of Jared was arguably negligent in not putting out a wet floor sign. But that's exactly the sort of thing that a general liability policy would typically cover. So most businesses opt to carry some form of GLI, whether they need it or not. It's just a peace of mind thing. And for a lot of business owners, it doesn't cost that much. GLI policies can be, a few hundred a quarter in some cases, depending on your unique circumstances. Can range a bit more depending on the business activities, the size of the storefront, et cetera. Every policy is pretty uniquely underwritten, but the point is most businesses carry this whether they need it or not. But it's especially important for business owners with a physical storefront or other business location that's frequented by members of the general public. If you're creating the circumstances whereby a member of the general public could be physically injured or their property could be physically damaged, let's say a valet service easily damage the property of your customers or clients, you want to make sure that you have a good GLI policy that's specifically underwritten for your business activities. Because again, we're talking broad brushstrokes with these policies, but a lot of GLI policies might, for example, have exclusions for the cars of your customers. And if you're running a valet service, that means that your actual business activities would be excluded. So again, talk to an insurance broker or other qualified professional and make sure that the policy you're getting is actually underwritten with your business in mind to make sure that the business activities you're doing are covered by the policy. But GLI, it's really important to know because that is what covers physical injuries to customers and the general public. The next one, and this is a big one, errors and omissions insurance, also called professional liability or malpractice coverage. It is insurance that covers damages suffered to customers or clients, as, for example, resulting from the acts or omissions, which is failure to act, of certain professionals, doctors, lawyers, accountants, CPAs, licensed professionals, pretty much, a lot of business owners, even if you don't fall into those categories, can get and benefit from E&O if you're providing services to the general public or to your customers or clients that they rely on. And if failure to provide those services competently or adequately can create damages. You might get an E&O policy even if you don't fall into one of those licensed professionals categories. But as I talked about earlier, errors and omissions, it is a claims-based or claims-made policy by and large. I don't really know of any occurrence-based E&O insurance anymore. It used to exist. I don't know if it still does. It's by and large claims-based now. So whereas general liability insurance, it's largely occurrence-based. So if you get a GLI policy and then you have it for the entire length of your business and then you go out of business and that policy ends, the mere fact of having had the GLI policy should protect your business up till the lifetime policy limits. Remember, I talked about lifetime policy limits. I haven't really talked about them much in detail. They mainly apply to things like general liability insurance, where, you were in business for 30 years, you had a GLI policy, you retire, and then you have, a dozen different claimants come out and make a claim against the policy. The policy will have typically a lifetime cap where it's only going to pay so much. So that's how that whole thing works. But GLI, occurrence-based, E&O, claims-based. Important to remember, because if you are the type of business that needs or has E&O insurance, and then you close up shop, you'll probably need either a continued E&O policy or what's called a tail policy or a tail rider, something that will protect you even after retirement or closing the business. But that's E&O in a nutshell. The next type of insurance, you've got commercial property insurance. This is, a lot of insurance policies for businesses have personal equivalents. Commercial property is a lot like your typical property insurance for a residential property that you own. It's meant to cover the real property of the business and the stuff kept inside. So the land, the building, the equipment, the assets stored inside. It's meant to protect from certain casualty events like fire, for example, or other similar losses. Sometimes it covers wind, hurricanes, who knows. But it's important to really drill down with your commercial property policy, because a lot of them have very specific exclusions. Earthquakes, floods, things that you might look at and say, well, hey, why doesn't my property insurance cover that? That's a casualty event that is very real, especially in the 21st century with the weather going pretty bananas on us all. So you want to make sure that your property insurance policy covers the things you need it to cover. You might have to get specific riders or endorsements for the policy. Those are basically extensions to a traditional policy to make it cover the things you need, but it's meant to protect your building, is the long and short of it. Keep in mind, and this is a big misconception among business owners who say, I've got commercial property insurance on my storefront, so I assume it's going to cover if a customer slips and falls in my store, right? Wrong. Absolutely not. Your commercial property insurance is not meant to protect to cover third parties from bodily injury occurring on the property, with a few very limited exceptions. By and large, that is the subject for GLI. That is something that falls within the ambit of general liability insurance. So even if you have commercial property insurance, don't neglect the other insurance your business might need. General liability is very important. The next one we're going to cover is called business income insurance, also known as business interruption insurance. Now, this is a policy that will replace lost income in the event of certain covered events, such as the loss of business critical assets due to fire or theft. A pretty basic example is someone breaks into your business and steals all the computers. Those computers, especially in the 21st century, can be mission critical for a lot of businesses. And so business interruption insurance is meant to cover you somewhat. Maybe it pays a percentage of the income you would have otherwise expected. And so it keeps the business afloat while you're replacing the computers. There's a lot of misconceptions about what business interruption insurance covers. A lot of folks, especially with this COVID pandemic, tried to lean on that business interruption insurance saying, hey, COVID, I'm shut down, I can't operate, I need some help to stay afloat. And some policies were so broadly underwritten that maybe they covered the COVID, which was basically, pandemic / natural disaster, depending on how the insurance classified it. But by and large, business interruption insurance isn't meant to cover things like that. It's not meant to cover lost income due to accidents, illnesses, or events that are purely economic in nature. Slowing economy, for example. I had a client who, well, it wasn't really a client, it was more of a lead, who called wanting to sue their insurance company because they had business interruption insurance, and then a mix of competition and other economic factors cut their income into a third, and they wanted to go make a claim against their insurance policy, and the insurer said, no, that's not the sort of thing we cover. It's really not. Business interruption insurance is typically limited to covered casualty events. Like I said, fire, theft, wind damage is surprisingly specific. I mean, but that is specifically included in a lot of these policies. So that's business interruption insurance. It'll replace the income of the business in certain casualty events. Also worth bringing up, because a lot of businesses now rely heavily on the cloud. For example, AWS, Microsoft Azure, a lot of businesses have cloud computing for their email, websites, pretty much everything, file storage. And so when one of those services goes down for an extended period of time, what happens? I mean, for some businesses, 24 hours can be thousands and thousands of dollars. That is actually something that might be covered by business interruption insurance now. That is the sort of casualty event beyond the control of the business owner, not related to just general economics, that can create damages that would be covered under these policies. At the end of the day, you really need to make sure that you know, if you have this coverage, that you know what it does and doesn't cover, because every business interruption policy I've ever looked at has been very different from every other one. What it does include, what it doesn't include. So you need to make sure that you understand your policy. Again, talk to a qualified professional, but make sure if you're going to have this insurance, that is specifically underwritten to keep in mind the risk factors that might impact your business. For example, if you rely heavily on cloud computing, make sure that that's included as one of the covered casualty events. Workers' comp insurance. This is one that's mandated by the state. It's typically not optional. If you have a certain number of employees, you need to comply with the workers' comp regulations. You typically need a workers' comp insurance policy. The insurance policy is meant to cover the harm suffered by employees for workplace-related injuries. Those employees would typically make their claims through the workers' comp process. It doesn't create a side channel for employees. They still have to go through the workers' comp process, make a claim. The claim is either accepted or disputed by the employer. I've represented employers in front of the DWS in the past in these sorts of claims. I mean, they can take a while, but then at the end of the day, it's on employers to make sure that they have a policy or other financial means to cover these workers' comp claims. And so a workers' comp policy, they're typically not all that expensive, though they do vary depending on the risk factors of employers. But this is another one where failure to have this one could create personal liability for the business owner. If their employee is, for example, grievously injured and there's no policy in place to cover it. So workers' comp, this is one that's pretty vital for employers. And there's there's a good number of insurance carriers and providers that specialize just in workers' comp coverage. So if you are an employer and you don't have this, you really ought to look into it. Data breach and cybersecurity insurance. This is a big one. Data breach and cybersecurity, this is coverage meant to protect a business from damages suffered by customers or other third parties in the event that sensitive data held by the business is compromised and misused. Typically, you're looking at data breaches, whether it's hacks of the system or otherwise. They're becoming very prevalent these days. I'm listing, and I usually don't do this in presentations, but I want to drive the point home. Some of the world's largest companies, Electronic Arts, McDonald's, Peloton, Volkswagen, all had huge data breaches within the last month. This is just within the month of June. So if you go further back, I mean, you heard about the Colonial Pipeline cybersecurity issue back in, I think, January. You go further back, the credit bureaus lost the sensitive data. We're talking social security numbers in a lot of cases, dates of birth and other private information of tens of thousands, maybe hundreds of thousands of just people who had credit profiles. And so these sorts of things can create huge liabilities for businesses large and small. Because when you think about the data that a small business holds, if you have an HR system, or even if you don't, and you just have your employees' names, social security numbers, dates of birth, addresses in a spreadsheet, that information I just outlined is enough to create an identity theft scenario. Someone could go out and get a bunch of credit cards, maybe even a personal loan for $40,000. I mean, personal loans, they can really get up there. I saw one for 40 grand the other day in someone else's name, you know, $40,000 personal loan just based on the information in that spreadsheet. And then they disappear into the wind. Your employee is being pursued for $40,000. There's damages. And you know, the damages from identity theft, they can linger for years and years after the fact, where credit profiles are ruined. Sometimes you even have to go get a whole new social security number, which is a drastic relief measure, but it happens. So, you know, that's a single employee can be tens, even hundreds of thousands of dollars. When you look at in the aggregate, if you have, for example, the tax ID numbers of 100 customers, along with their addresses and whatnot, a leak of that kind of information could create massive liabilities for a small business that far outpace the value of that business. I mean, if you look at the liquidated value of the business, its assets, its goodwill, everything put together, it'll almost never cover the potential damages from a cybersecurity incident. It's just the honest truth is that it's the value of the information even small businesses hold in their cyber systems is tremendous. And so these cybersecurity policies, you can get policies that protect the business in the event of a data breach. These policies are often written with more than a few obligations on the insured. You know, you think about the obligations of the insured and you think, okay, I've got to pay my premiums and that's that. You know, as an insured, you also have an obligation to typically engage in what's called best practices or safe practices, or alternatively, don't be reckless or grossly negligent with the information you have with your position. So cybersecurity insurance will often require, for example, some basic cybersecurity infrastructure, firewalls, good password protocols, antivirus software, et cetera. You know, it can range from the very basic to the very complicated precautions, but you want to make sure that you're holding up your end, because if you have a data breach, you want to be able to show that you did everything that was commercially reasonable to protect yourself from it, so that your insurance policy is going to pay out in the event of damages, in the event of harms or losses. These sorts of policies, I really couldn't tell you what they cost, because depending on your business, they can be pretty cheap or pretty expensive, depending on the kinds of data that you wield. They can be especially expensive if you're dealing with HIPAA protected information, medically sensitive PII. But at the end of the day, it's worth looking into, and it's worth looking at the potential damages that you might have based on your business and the information that you're holding, so that you can say, okay, maybe I really want this given the potential exposure that I have. It's a good policy to have, or at least it's a good policy to seriously consider having. Another very common policy for businesses is what's called commercial auto insurance. Commercial auto insurance, this is another one that has a pretty obvious personal corollary. People have personal auto insurance for their vehicles. If you're using vehicles for business purposes, you want to have commercial auto insurance because I don't know if you know this about your personal auto insurance policies, but if you use a personally owned vehicle for commercial purposes, um, your personal auto policy is usually written in such a way that it will not cover issues arising from the commercial use of your vehicle. So if you personally own a truck that you're using to haul things for your business, your personal auto policy is not going to likely cover damages if, for example, you get into an accident while on the job. As a general aside, and I'm going to say this as a lawyer who has dealt with these cases more than a few times, do not make a habit of using your personally owned vehicle for business purposes, even if you have commercial and personal insurance on that vehicle, because this is an example of what's called commingling of assets. Basically, you're using your personal assets in furtherance of your business. Doing that blurs the line between person and business. And so if you have an LLC or a corporation, and you're engaged in that activity where you're using your personal vehicle for business purposes, even if it's fully insured, it gives rise to the potential for someone who, if they sue the business, to pierce the corporate veil, like I talked about earlier, and go after you, the business owner, for any damages. So it's just a bad thing to do. And I see a lot of my own clients doing it, and I tell them every time, stop doing that. If you're going to have a vehicle that you're using for your business, have it owned by the business, have it titled in the name of the business, unless you have some compelling reason not to. And I know some people, for reasons of financing, have it personally titled, but if at all possible, my recommendation for my clients, which obviously you're not my clients necessarily, but for my clients, I always recommend have the vehicle owned by the business. Another thing to keep in mind with commercial auto insurance, this is not the same thing as simply having a rider on a personal auto policy. For example, people who do ride sharing, Uber, Lyft, etc., a personal auto policy isn't going to cover that traditionally because that's a commercial venture and you've got a personal policy. But the personal auto policy might allow what's called a rider, which is just an extension of the policy that would cover that specific activity. So a lot of personal auto policies now have a ride sharing rider where you pay X amount of dollars more per month and it'll cover ride sharing accidents. That's a very unique rider for personal auto policies, but by and large, if you're using your vehicle for commercial purposes, you need a specific commercial auto insurance policy. And if you don't have it, and you get into an accident with that car, it's the business that's on the hook for the damages, if not the business owner. Finally, and I say finally because this is actually one of the most important policies that you can have, umbrella insurance. There's personal umbrella, then there's commercial umbrella. Umbrella policies are just typically a catch-all. They extend other insurance policies. So if, for example, you have a general liability policy that has a $1 million cap, whether that's per occurrence or per person or whatever, if it's got a $1 million cap, but you're looking at more than that in damages, let's say you've got $3 million in damages and a $1 million GLI policy. If you have an umbrella policy for $5 million on top of it, the umbrella policy is meant to kick in when the GLI policy taps out. It's just an extension of your other insurance products. And it's useful, it's called an umbrella because really, umbrella is meant to provide an extension for multiple policies at the same time. For example, general liability, errors and omissions, commercial auto, any number of them, maybe even cybersecurity, depending on the way the policies are underwritten. But it's really important to understand that umbrella will extend certain policies, but not all. Often they won't extend commercial property insurance, for example. Commercial property isn't often extensible by an umbrella policy. They won't extend, what are some other ones? Well, it's just important to look at your umbrella policy as underwritten to understand what it does and doesn't extend. And when you think about umbrella insurance and really all of your insurance, this is why I keep harping on this point. It's good to talk to a licensed professional who can help you create a package or portfolio of insurance products for your business and make sure that they all work together. So if you get an umbrella policy, that professional should make sure that the umbrella policy does extend the other policies you have. And if it doesn't, for whatever reason, they should be able to explain that and explain why. But umbrella policies are very nice for boosting the amount of money that can pay out certain claims. One last point before I get into some hypotheticals. Umbrella policies extend your primary policies, but they don't always extend them completely. And what that means is, let's say you've got a general liability insurance policy that's going to cover a wide range of potential injuries to people, to property, etc. Your umbrella policy might extend that general liability policy, but maybe it doesn't cover certain kinds of harms. Maybe it doesn't cover property, or maybe it doesn't cover certain medical bills or certain types of damages. Umbrella policies can be underwritten in such a way that they don't fully extend the policies beneath them. Even though they provide an extra pot of money, it's only for certain claims that would otherwise be coverable by the GLI policy, for example. So, they're nice to have, but it's really key to understand their limitations. So I'm going to cover just a few examples here really quick. And then we'll do a Q&A, and if there's no questions, I might cover one or two other types of insurance that I see. But let's look at this hypothetical. Janet owns an accounting firm that provides services to small and mid-sized businesses. One of Janet's employees made an error that resulted in substantial penalties and damages for one of Janet's clients. That client sues Janet and her firm. Keep in mind, when the client sues Janet and her firm, they'll probably sue Janet, the firm, the business, if it's an LLC, a professional corporation or whatever, and the employee who made the mistake. They typically, the rule is sue everyone and let the court sort it out later. So what happens in this scenario? So Janet has an errors and omissions policy, an E&O policy that covers her, the acts and omissions. It's basically like a malpractice policy. So that would kick in here because the claim is based on an error that her firm made. The E&O policy should be written to include the employees of Janet and her company or firm. The policy in this case includes a duty to defend. So the insurance company is going to provide and pay for the lawyers to defend Janet and her firm. The malpractice carrier is going to probably put up the defense for the employee as well if the employee is separately sued. And what you'd be looking at here is a situation where the policy will defend, Janet's firm and Janet's employee, and that might be separate defenses. That might be separate attorneys with different law firms. If, for example, there's a potential for a conflict of interest between Janet's employee and Janet and the firm, if they're going to try and throw each other under the bus, for example, you can't have the same lawyer representing all of them. So the insurance company would probably have to, in that case, put up the defense for everyone separately. Now, assuming that the claims fall within the scope of the insurance policy, and they probably will here, the policy will pay the client the damages suffered by the client if the client prevails in the lawsuit, whether that's through settlement or trial or whatever. So obviously the policy here, pretty key. Let's look at another hypothetical and see how this one differs. Jessica owns a trucking company. She's got several employees, several trucks, all under the same company, the same, let's say it's a corporation here. The company has commercial truck insurance, which is kind of a form of commercial auto insurance specifically for trucking. Trucking is a very unique set of circumstances and risks, and so it's got a specific insurance policy for it. But there's a policy in place with policy limits of 1 million per person, 3 million per occurrence. Jessica also has a $15 million commercial umbrella policy. One of Jessica's employees falls asleep at the wheel, hitting a compact car, grievously injuring the occupant. That's as far as I'm going to go in describing the damages. I've litigated those cases before. They can be pretty gruesome, but assume for this hypothetical they survive. But they survive and they sue Jessica's company and the employee specifically for $10 million, and they win a judgment for $5 million. What happens here? This is an interesting scenario, and again, I've litigated these before. You've got the trucking insurance policy that applies in the situation. The policy does include a duty to defend. Again, this is one of those situations where it's in everyone's best interest that the claim be defended so that the insurance company pays as little as possible, and so that Jessica, the company, the employee have defenses. This is absolutely one of those situations where the employee and Jessica and her company are going to have separate defenses because the employee is uniquely liable. So they're going to get thrown under the bus by Jessica and her company. Meanwhile, the employee is probably going to say Jessica and her company failed to supervise. They imposed such draconian work requirements that the employee had to drive all night, etc. I mean, the mudslinging back and forth between Jessica and the employee is going to be pretty intense in this situation. But the insurance covers a lot of it because it's going to cover the trucking company and the employee. Now, the policy has a limit of $1 million per person. So in this case, it's exhausted after that $1 million, but it triggers the umbrella policy, which would likely pay the remainder, assuming that it's written specifically to extend that trucking insurance policy. That's the whole point of Jessica having the umbrella policy here, is to cover that difference. So you're looking at a situation where at the end of the day, the claimant who won a $5 million judgment would get paid from the insurance. The reason I'm pointing out so much, that the employee and Jessica are adverse to one another, imagine what would happen if they didn't have the umbrella policy. Then all of a sudden you've got the trucking insurance policy that taps out after $1 million, but there's still $4 million of judgment left, which means all of a sudden it's in Jessica's best interest to apportion as much of the blame as possible to the employee. And the employee similarly wants to shift all the blame to Jessica, because whoever the court decides is responsible at the end of the day has to pay that judgment. So if the court decides the employee is 80% responsible and Jessica 20%, this could be a scenario where the employee is on the hook for 80% of the judgment and Jessica 20%. It's very rare, though it does sort of happen sometimes, that you have joint and several liability between Jessica and the employee. Might happen in this case, but until the chips fall, they're going to try and throw each other under the bus as much as possible. So it doesn't matter here because of the umbrella policy, but if there wasn't that umbrella policy, this is why the duty to defend gets really complicated and why it includes separate defenses for people, the employee and the company. So important takeaways here. Every insurance policy is different. Every insurance policy is separately underwritten based on the requested coverage and the insured's unique risk factors. So you really need to work with a qualified professional, know what your policies do and do not cover. You want to make sure that you are requesting the policy that you need. So make sure that your business activities are included in the policy, they're covered by the policy. Make sure that your umbrella policy plays nice with your other policies so that it really does extend. All of these things, if you do this, this is the first line of defense in any claim against the business. You want the peace of mind knowing that if someone comes out of the woodwork and sues, you have insurance that's going to take care of it. Or at the very least, you have insurance that's going to defend you from these sorts of claims. So have an LLC, have a corporation. Those are very important if the insurance is exhausted and if the insurance fails. But insurance, very important. So we haven't really gotten any questions through the Q&A yet that I'm aware of. Nope. Does anyone have any questions?
Please go ahead and type your questions into the Q&A, but in Ian, I was really interested in the cybersecurity insurance because I imagine that is just so important for everyone to look into. And also another thing that I thought of is that, with opening back up and a lot of the nonprofits that we have out there and even different organizations are going to be looking into hosting a lot of events, a lot of large events. So I would imagine that like a special event insurance, and knowing the difference between is your normal insurance policy covering those events, or do you need to get something different? Because I know that the tourism department is putting calendars out of what's coming up through July, August, September. Very important.
Yeah. Any insurance companies you don't recommend? I just got that question. Unfortunately, that's not one I can answer. It's actually one of the rules of these presentations. I can't really promote or advocate for one provider or company or vendor over another. So I can't really specify, do I recommend for yes or no for any specific company.
But there are ways to research insurance companies out there, correct?
Yes, and I mean, obviously word of mouth is a big thing with insurance. If you have a bunch of friends who are business owners and say, this company did us all wrong, maybe avoid them. You can look at Better Business Bureau reviews. You can look at insurance company ratings. You can, there are Reddit forums aplenty with people's experiences. And keep in mind, everyone has positive and negative experiences with their insurance carriers. I don't know that you'll ever find one that has 100% positive reviews, but you can look at trends. And, if like I said, if you know people, you could certainly ask them who their carriers are. I'd also like to take this opportunity to really recommend, if you haven't already heard about this, or if you missed it when I introduced it earlier, the SBDC has no cost to you business counseling, which is a great first step in getting exposed to some of these resources and figuring out some of your next steps as a business owner. They're not insurance brokers necessarily, but they have a good network of resources, and they can point you in the right direction, certainly. So I definitely recommend availing yourself of that resource. One thing Leslie mentioned, which is special event insurance. A lot of policies, general liability, for example, unless you are in the business of putting on these events, those policies aren't underwritten to include one-off large events. Like if you're putting on a random event that's kind of unrelated to your business and then you invite a few hundred people to it, that might not be covered by your GLI policy. And so in that case, like Leslie mentioned, there's this thing called special event insurance. And you would want to look at that. Those are basically one-off policies. You have an event on this day, you get a policy that is specific to this day, to this activity based on the number of people you're going to have attending, the venue, what's going to be there, is there going to be alcohol, etc. Those are underwritten kind of on the fly, and you can get a lot of those policies just on the internet. I mean, they're not terribly complicated, and there are insurance carriers that specialize just in event insurance. So that's another good insurance policy you might need on an infrequent basis.
Absolutely. And Dawn says, thanks for the presentation. Our questions are specific to our policies. So we will be working with the insurance companies and advisors, which
Excellent.
is yes,
that is
exactly
what you need to do.
It is, because this is, we want to give you the information on why this is important and give you the overview, but we can't stress the importance of seeking the advice of professionals. And that's what the MN SBDC does, is it kind of drills it down and says, okay, let me send you off and go meet with your insurance agents. But this presentation gives you the overview of maybe some things you should ask your insurance agent. So that's great. That's the last of the questions. I want to say thank you to Ian Alden
Thank you all.
for today. We will be seeing Ian again. We also have all our other webinars live and on demand that you can check out on our website. So thanks again, everybody. You guys have a great day.